Hey, what's good, YouTube? It's your boy Will coming back with another update video for today, August 25th. Before we get into the video, please don't forget to like and subscribe to the channel, as it does help with the channel's growth. As always, it is very much appreciated. Without further ado, let's get into it. So I'm going to start off today's video with this picture that I posted on my IG late last night. If you did notice it, or if you did notice it, you're going to get a first-hand glance at it now. I did want to point out a couple of obvious things. This is GameStop on your left-hand side. GameStop has 74.38 million share float. Okay, so let's take that into consideration. And then we have AMC on our right-hand side, right? AMC has 513 million share float. Both of these are verified and confirmed, but that's not the takeaway. The takeaway is, please notice, obviously, aside from the difference in price in both stocks, the trading action. Now, I'm just going to give a small emphasis on what I'm trying to imply. Take into consideration one being at 74, the other one being at 513. If you do that math, essentially, AMC has 7 times more shares than GameStop, which means that for every one buy you make in AMC, GameStop would need 7 buys in order to equate or match the price action on a chart, if that were even mathematically possible. But the further confirmation I want to point out is right down here, which is the volume, which are these blue bars right here at the bottom on both charts. As you see, the volume is also almost matching. So please take this image into account specifically the next time you hear the media or any news article say that there is no short squeeze happening, that it's just dumb money manipulating the market. Please reference this photo so that you can fully understand who is actually manipulating the market and who is not. The only thing I have ever seen to be even remotely close to this is something called algorithm trading, which a lot of hedge funds do institute with manipulation of stocks, especially if they, let's say, are holding a massive short position that could potentially even bankrupt them. Just kind of goes to reaffirm our position as to why we hold and why we are involved in buying the dip every single time with AMC and GME. So just keep that in the back of your mind as reference. I thought that was pretty neat. I'll even reaffirm this before the end of the video today, as I'm going to try to keep this video short and sweet and simple to the point. But nonetheless, let's get into the chart and the price action for today. As I did predict yesterday, when we ended the video here, we had ended the day in consolidation. I stated that since we were forming bars on the bottom of this line and on the top of this line, that this was going to identify essentially as our next floor or level of support for us, where we would start to build or consolidate on potentially the next trading day and then shoot up after that. So I gave you 3 scenarios. I said, 1, either the day will start and we'll get into a nice increase and continue to push forward, or you might get a nice sideways day, which essentially, if you're looking at this chart, this is pretty sideways, up and down, up and down, up and down, tight trading right above that support line we had already formed late yesterday. Or the third scenario was, I said we would get a small light sell-off. Well, if you're looking at the chart based on my predictions, I'm going to give myself credit for 2 out of 3. I'm not going to give myself credit for this little run-up, because that doesn't really count, to be honest. That was more of a fluke, or potentially some large institutional investor coming in and making large buys. If you are part of my text group that I have established, where I do share stock news and articles and finds, I did point out in the group there was some massive $250,000, $500,000 large share buys throughout the day, especially in the morning hours, as you see down here from the higher volume, which then weaned off towards the end of the day. But this could have been associated to that potentially, which then after that, the hedge funds did put in these shorts, and you see the price start to dip, and then we pushed up against it once again and then sold off towards the latter end of the day. But on a good note, once again, this line is confirmed, as you see bars or candles forming below it and above it, which again just gives us reaffirmation that this is a line of support for us, or a level of support where we can continue to run up from tomorrow. Now, in after hours, we did wean off a little bit away from it, but nonetheless, we will get confirmation of that in the morning if we start forming candles above this blue line on our next run up, potentially heading into the weekend. So that kind of sums that up. On another side note, I did want to point out the options chain. As you do see, we did get 1.1 million calls purchased today versus 370,000 puts. That is a substantial difference. If you guys remember from some of my earlier videos, normally we were anywhere from 500,000 to 200,000 or 600,000 to 400,000, but we were close in a range. Never to this far of an extreme where essentially it's almost 1 million more on one side than the other. So that's another positive sentiment note to take into account. If you also paid attention to yesterday's video, I said potentially because we did get such a heavy push that they would open new strike prices. As you see here, yesterday we were maxed out at 80 and then they added additional 3 more, once again confirming what I had stated. We have the 85, the 90, and the $95 strike. And you see some massive buys going on in here, but also take into consideration who would make these buys, right? You essentially have $1.2 million that have been bought up in contracts at 24, 19, and 18, but at 34,000, 3,000, and 4,000. Doing the math, that's like 1.2 million. Go ahead and check me on that. But essentially, someone is making a $1.2 million bet that AMC before August 27th will hit the 85, the 90, or the $95 strike. To me, looking at this, I don't consider that to be retail investors making those type of trades. To me, that is more of an institutional investor making a very large bet, or someone holding a very large short position trying to mask it, to be honest. And I'll get into that a little bit later in videos. I don't want to throw too much to confuse you guys, but I did just want to point that obvious. That 3 new strikes did get opened up for this week's option chain. But the money, do the math, I think it's 1.2. If you add up basically all these contracts and multiply by an average price, I believe we can use the 0.2, so essentially $20 for each contract. I think it's like $1 million, $1.2 million. Again, you can go, feel free to check me on that. But nonetheless, going into some of the tools we use to track short interest, as I had mentioned to you guys in videos before, we were sitting at 85.8 short shares. You now see that this number has increased according to Lucid Tracking, which is a tool that I am subscribed to that I use frequently. And this number has now jumped up to 92.42 million short shares, which again, when we are looking at the chart, as I had mentioned to you guys before, when we had this run up here, to bring the price back down, they had to continuously short it, which means they needed to add to their short position. We, as retail investors, bought up the dip. We have been pushing this price back up ever since then, once again making it a failed trade for hedge funds, because again, their goal is to bring the price as low as possible. We are clearly showing them that is not an option as we continue to push this price up. With that being into consideration or in mind, please remember that our next level of resistance is up here at the 49.86 mark, followed by one at the 54, followed by another at the 60. So with each level of resistance, you can expect to see something similar to this. It'll be a violent break, followed by a pullback, followed by consolidation, followed by a next rip, and so forth, on our way back up, getting to either our high of the year, which was 77, or potentially even higher. But if you're going to ask me, my wager on is that it's going to be a lot higher. But nonetheless, I did want to cover a little bit of news that is kind of important that you guys should take into consideration, especially heading into Friday's trading day. There is a Fed meeting. Papa Powell, or the or the Fed's chair, Jerome Powell, will be having a meeting in Jackson Hole, Wyoming, where they will be talking specifically in relation to something called tapering, which whenever you hear the word tapering, all you need to understand or know is that they are specifically talking about inflation. Now, as I've explained to you guys before, we can easily see fear in charts anytime we would like, based on any company we look at, right? Because again, when COVID hit, this was fear that was shown to us in a chart. And again, as I've already shown you in a previous video, every single chart has this March 2020 dip in it. Every company just about has this major dip, which again is fear. Well, anytime they are talking about inflation, what they're talking about is that these massive run-ups that these companies have had, Google, Apple, Microsoft, Coinbase, you name it, right? Any of these major run-ups, what essentially they're talking about with inflation is that the price has gone up way too high too fast. So we're topping off. When you increase, or the Fed increases rates, essentially what they're wanting to do is to lower these prices down so that they can continue to run up. So keep that in mind. This meeting is happening on Friday, so you should see the news media outlets start to report a lot more FUD, which again is nothing more than fear, uncertainty, and doubt. But I'll leave it at that, guys, to keep it short. Plus, I have a pretty major headache that I've been dealing with all afternoon. But nonetheless, I'm going to give myself the evening to rest. I'll catch you guys in the next one. Please don't forget to like and subscribe. Leave a comment down below. I'll get to it if you can. Or, as always, you can follow me on IG and Twitter. Until then, guys, I'll catch you in the next one.